Hello traders, and welcome to lesson 15 in the ReadFX Beginners Forex course. In this lesson then, we're going to answer the question, what is market structure? So markets move from point A to point B in a very particular way, forming patterns and structures as they move. Now this is known as market structure. So let's have a look at some examples on the chart. Okay, so market structure is a very complex topic, and I could probably make an entire course just about market structure. So the purpose of this lesson then is not to teach you everything about market structure, that would be impossible. But what I will do is teach you the basics and the things that you actually really need to know. So when a market moves, it forms particular patterns. Now in the last lesson, we learned about swings. And what you can see here is an example of something called an uptrend. Now an uptrend is just a pattern of swings. So we start off with our high, this is our swing high, and the market will then pull back and form a low. This is a swing low. Now what we get next is a pattern of higher highs and higher lows. So what's happening, if I just draw, is we form our high, and this is a level of resistance. The market pushed up, it got to this level, it couldn't go any further, and then it came down. And the same thing happened but the opposite way. So then the market came down, it reached this point, and it couldn't go down any further, and then it pushed up. Now here's the interesting bit. So this is what's called structure. Now the next thing we get is a break of structure. We have a structure here which is a high, and we have a structure here which is a low. Now at this point we don't know which one of these two is going to hold. In an uptrend it is the highs that break. Okay, so if we extend this line we can see that price broke through it. This is a break of structure, and then it continues up until it reaches another level where it can't go any higher, so it pulls back. Now what's interesting on the pullback is that usually it will form a higher low. You see that this low is higher than this one, hence it's called a higher low. It will pull back to the previous area of structure, in other words this high. So if I extend this line across, this is not a very straight line, I apologise, the market pulls back and it will retest this previous line where the structure was formed. The market then pushes up again and we see the same exact pattern. If I extend this line, we get another break of structure, it breaks this high, and the pattern just continues. Okay, so it forms higher highs and higher lows, and this is an uptrend. Now obviously a downtrend is the complete opposite. So we start with our high and our low, and then it's exactly the same. The market breaks this low, pushes down, reaches a level it can't go any further, pulls back, retests this level, and then forms a lower low, so it pushes down again, breaks this one, and it just goes on. Okay, so this is two very clear common examples of market structure. This is an uptrend and a downtrend, and we are forming patterns of higher highs and higher lows in an uptrend, and lower highs and lower lows in a downtrend. Okay, so here we have an example of an uptrend as we just saw previously, and then what we have here, this is called a range. So if I draw these lines on, that's not particularly straight. So what happens here is the market forms a high as before, and it pulls back and it forms a low. But this time we don't break structure. Okay, so we don't break this high. Instead the market comes back down, and we don't break the lower structure either. And these can go on for a very long time. This could just keep bouncing and bouncing and bouncing for days. Okay, and this is what's known as a range because it's just stuck between a floor and a ceiling. Eventually it will break out. It might break out to the upside, or it might break out to the downside. In this example we finally break structure here, and then we form a high because the market cannot just keep going up forever. So eventually we reach another point where the market can't go any further, and it's going to pull back. So where does it pull back to? Well, the obvious place is the previous structure, which is these highs, this level. So it pulls back, retests it, and pushes up again, and again we get another break of structure, and then we will get the same pattern that we saw in the previous slide. Here is an example just the other way around. So the market is falling, and eventually it hits a level where it can't go any further. We get a retracement and it forms a high. Okay, same again. The market cannot break the low, pushes up, it cannot break the high, and on we go in a range. Eventually it will break out, so we get a break of structure. The market reaches a place where it can't go any further, pulls back. Where does it pull back to? The obvious place is the previous structure, we get a retest, the market pushes down again, breaks the previous structure, and then on we go with a downtrend. So that was two very clear examples of common market structure, so trends and ranges, and we're looking at patterns of higher highs and higher lows, and we're also looking at patterns of when the market does not make higher highs and higher lows and it gets trapped before it breaks out. So let's go to a real chart now and have a look at some examples. Okay, so here we are on a real chart, and what I want to show you is the difference between what I just drew in the previous slide, where you get these absolutely perfect textbook examples of a downtrend. In real market conditions, you often don't get that. You don't get this beautiful pattern of perfectly lower highs and perfectly lower lows. So if I draw on this high, this low, high, low, high, you'll notice that I am missing out some of the little ones. I'm taking the main sort of movements of the market in this example. Okay, so something like that. Now let's have a look. We have our high, we then have a lower high. That's good so far. We have a lower low. Well, in fact, we don't have a low to compare it to. So here's our low. The next low is lower. So far we are following this pattern. That's good. Now this high is arguably slightly higher than the previous one. So that's not good. We're now making a higher high when we should be making a lower high. The next low is lower than this one, so we're still making lower lows. That's good. Now we make a lower high. That's good. But look, we've just made a higher low. This low is higher than this one. In our textbook example, that doesn't happen. The lows keep getting lower and the highs keep getting lower. So we've already broke the pattern twice. This low is higher than the previous, and this high was higher than the previous. Now that doesn't mean this isn't a downtrend. That doesn't mean the market isn't moving down. This is just a real world example of how markets actually move. They sometimes break the rules. So let's look at these two highs. Here's another very clear example. This high is much higher than the previous one. Now that doesn't appear in our textbook example, but then we do get a big push down, and this is most definitely a lower low. Then we get a lower high, and obviously you can see we once again over here break this low and we continue the pattern. So just be aware that in the real world, markets move in a slightly different way. They don't follow these textbook examples. So let's have a look at an example of a range then. Okay, so here we have an example of a range, and I'm going to draw the lines on in a minute. But first, I just want to remind you of the sort of perfect example, the textbook example that I gave earlier. The market moves down, eventually it finds a level it can't go any further, pushes back up, and it cannot break this level either. And it gets trapped between a floor and a ceiling, so this is called a range, and eventually we get a breakout, and then it will continue trending. So this is what a textbook example looks like. Now let's have a look at the real version. Okay, so I've now marked up the range. I'm just going to get rid of this so we can see a little bit more. And I've zoomed in a little bit closer because there's something I want to show you. So unlike our textbook example where price just bounces perfectly between floor and ceiling, what we tend to get in a real range is that sometimes it doesn't quite make it, and sometimes it goes a little bit too far. So rather than following this pattern of beautifully bouncing between the two levels, I just delete that, what we tend to get is sometimes, like this example here, it doesn't quite make it to the ceiling, okay, but it bounces anyway, and sometimes it pokes through. Okay, so it goes a little bit further, as you can see in these examples. This one doesn't quite make it. This one is actually sort of from what's called a ghost zone, which I'm going to show you in a second. Okay, so I would actually draw this as here. This one is obviously pushed right outside, but then come back in. And this is, again, a real world example. It won't bounce perfectly, but it's still a totally valid range. Now, one last thing I want to show you is if I just hover my mouse roughly halfway and draw a horizontal line, you will see that within the range there's actually sort of a hidden level. I normally draw these as a dotted line because I call it a ghost zone. It isn't really there, but you can see there are some very clear reactions from this ghost zone. Okay, can you see these reactions everywhere? And this is what I'm sort of talking about. It's a hidden range within a range, if you like. Okay, so be aware that In the real world, the market behaves slightly differently. The market structure will never be a textbook example, okay? So you just have to sort of zoom out and see the bigger picture. Is it still within this range, or has it broken out and is it going to continue? Don't get too wound up on the little intricate moves and the little false breaks that sort of occur. You want to look at the overall market structure to find out what's happening. In this video then, we looked at patterns of highs and lows, uptrends and downtrends and ranges. In the next lesson, we're going to look at support and resistance.